Hey YouTube, how's it going? Well, it's that time of the month again, time to do my M1 finance account review for the month of February. So let's get into it. All right, we are on the home page for my M1 finance account. The objective of this portfolio is to have a value of over $100,000 by the end of 2025 and dividend income of $500 per month by the end of 2025. I know those are aggressive goals, but I'm going to try to hit them anyway. What I do is I send $100 twice a week to this portfolio, and if the S&P is down 2% or more, I send another payment. Now that other payment depends on how much the S&P is down, but it's usually just an extra $100. But I probably will have to be a little bit more aggressive in funding this portfolio if I want to meet those objectives. But I'm anticipating a market downturn sooner or later, and if the market turns down again, I'm going to get much more aggressive with my contributions. But if we take a look at the portfolio was worth $18,231 last month. Right now it is worth $19,319. Now the money weighted return last month was 125%. It has slipped to at 120%. So the portfolio stocks value have actually gone down. The reason why the portfolio's current value is higher is because of contributions and dividends alone. And if we look at the value over time of the portfolio, we can see as of last month, when I did the video, the market was starting to tip over a little bit, but it had a nice sharp move up after I did the video, but right now it is doing the same exact thing. So hopefully we have another sharp move up after this video. Now, if we look at the 1 month returns of the portfolio, it is down 2.48%, and the total gain is negative $478. Now let's scroll down and take a look at some of the biggest winners and losers of the month. My biggest winner for the month was Carnival Cruise Line. So some of those plays that got knocked down pretty hard because of the pandemic are starting to rebound sharply, and Carnival is actually my biggest winner for the month. Now, my second biggest winner was Snapchat, and I don't know if you saw their earnings or not, but if you didn't, those earnings were fantastic, and Snapchat is continuing to grow very fast. Number 3 was Baidu, and Baidu was actually my top performer for last month, so it is still number 3 on the portfolio. It's still performing very strongly. Number 4 was Simon Property Group. This was a real estate investment trust that I was picking up quite heavily during the pandemic. So this one is performing very well. I believe during the right around the pandemic lows, the yield on SPG was right around 7 or 8%. But because the real estate investment trust stock has risen so much, the return on this is probably only around 4.5% right now. Coming in at number 5 is Goldman Sachs, and Goldman Sachs has been performing very well. They have a decent paying dividend, and JP Morgan Chase is number 6. They're moving up quite nicely together. So some of these bank stocks are doing very well. Now let's take a look at the worst performers for the month, and my worst performer was CRISPR Therapeutics. CRISPR Therapeutics has absolutely gotten murdered this month. So actually my contributions have been buying a lot of CRISPR. So if CRISPR does rebound, I should do pretty well for next month. My number 2 biggest loser was Tesla. And this one is actually quite surprising, but Tesla is starting to tip over. So if to go down, I will continue to buy more for my M1 finance portfolio. I'm totally fine with Tesla going down. Number 3 was Apple. I have no problem accumulating some more Apple. They're obviously at least most likely going to be much higher in the future, so I have no problem picking up more Apple as that pulls back. Alibaba, I think Alibaba is going to be strong in the future, so I have no problem picking up more of them. And of course, ARKK was hit pretty hard as well, so I am picking up more of ARKK as it falls. But that is how the portfolio has performed for these last 30 days. Let's take a look at some of the charts of these stocks and see how they look like they're going to be performing for next month. All right, well, let's start with the biggest winners for the month. And the first one is Carnival Cruise Line. And I was accumulating Carnival Cruise Line quite aggressively during the pandemic lows and all summer. And it looks like it is finally starting to pay off. And that's why you get diversified in these portfolios, because stocks that were out of favor eventually become in favor as long as they don't go bankrupt, and vice versa. Other stocks that are strong eventually start to tip over and pull back. Well, when you're diversified, the dogs of your portfolio become the winners, and the winners become the dogs eventually, at least temporarily. But if we zoom in on Carnival Cruise Line, we can see there's been a lot of volume coming in these last several months, and it has now broken out to a new 52-week high and is holding that 8-period exponential moving average quite nicely. So I would expect Carnival Cruise Line to have some continued strength and moving into a new high, and probably into the 30s before long. I think the only thing that can derail that is just a huge market sell-off where everything just gets torn down. But Carnival Cruise Line is the strongest, and the chart still looks the strongest. So I would expect continued strength for Carnival Cruise Line. Now, the next one that I had that was performing well was Snapchat, my second best performer. Now, Snapchat, if you're not aware, they came out with their earnings on this day right here, this huge candle. Now, in that earnings call, they said that they were worried that there could be some weak ad revenue, I think based on the way Apple is using its new privacy terms. So the next day, even though earnings were fantastic, it gapped down pretty strongly and it sold off in the beginning of the day, but then it was bought up quite aggressively after that. So, despite this recent pullback, honestly, the way a lot of big tech companies are doing right now, Snapchat is holding up quite well. And if this market stabilizes and moves out to a new high, I expect Snapchat to be really strong, because their earnings were pretty strong, and they are showing quite robust growth in their daily active users. So I would expect Snapchat to be close to $100 a share if the market doesn't tip over. If the market can stabilize and hit new high grounds, I think Snapchat could be right around $100 before too long, because this stock has been super strong. The next one that I had was Baidu, and this was my biggest winner for last month. So it's nice to see that it's still continuing to be one of my stronger performing stocks despite this big pullback. But we've seen this in a lot of tech stocks. So actually, Baidu is holding up pretty well, but there has been a lot of selling volume coming in. So this is definitely something I need to keep an eye on. Now, I expect Baidu to be in my portfolio for the long term, so I'm not too worried about it. If it does pull back, I will be happy to scoop up shares cheaper than they are right now. Now, the next one I want to show you is Simon Property Group. This is that REIT I was talking about. And I was accumulating Simon Property Group near the pandemic lows quite aggressively, just like Carnival Cruise Line. And it looks like the REITs are starting to pay off as well, because some of my other REITs are starting to do just as well as Simon Property Group, even though Simon Property Group is outperforming them at the moment. But it looks like the real estate investment trusts are starting to pay off. So this group could do really well going into the rest of the year. And the next winner that I had was Goldman Sachs. You can see Goldman Sachs has been on a roll, so I am glad that I was accumulating this one over the summer. I didn't expect it to go up this strongly, but hey, I'll take it. And we'll just take a look at JP Morgan, just because JP Morgan has been moving up probably about the same as Goldman Sachs. So some of these banking stocks are getting really strong. Let's take a look at Wells Fargo while we're here. Wells Fargo has been performing very strongly. So if you got into these stocks over the summer, you are doing quite well in some of these banking stocks. But let's take a look at some of the dogs now. All right, well, let's take a look at the biggest loser in the portfolio for the last 30 days, and that was CRISPR Therapeutics. And if we look at this chart, it looks absolutely ugly right now. Just a huge sell-off after this massive run over $200 a share, and it has been in free fall ever since. Came all the way down to the 50-period simple moving average, and that gave it basically no support at all. It just kind of went sideways until it finally broke through that moving average, and we are headed down towards the 200-period simple moving average. But the good news is, if you wanted to buy some of this stock but you missed the run, now it's got to be looking pretty attractive. And if we throw a Fibonacci grid on here, go all the way back to the lows, back during the pandemic. Let me move that down a little bit where it's supposed to be. We can see that there should be some pretty good support right around that 200 period simple moving average if it does fall that far. And if it does, I'm definitely going to be buying some for at least a swing trade, because this should offer some pretty good support for a nice size bounce up, because this thing has been an absolute free fall ever since $220 a share. So if it can get down to around $110 a share or so, it's looking at about 105 to 110 is the buy range that I am looking at. I think CRISPR should get a pretty substantial bounce up, and as long as the market doesn't just completely turn over, I think CRISPR is a good bounce candidate. Now let's take a look at the next biggest loser in the portfolio, and that was Tesla. And I already have a support area drawn on the Tesla chart that I am watching. If it comes down here, I'm going to be very, very aggressively buying Tesla. I think this is going to be a fantastic area, at least for a short-term bounce. But if you have long-term conviction in this stock like I do, I think this is a great area to be adding. If it comes down to that 200 period simple moving average, that white line on the chart, it will coincide with this support area, and I think that'll be a fantastic area for support on a Tesla stock. We throw a Fibonacci grid on there, we can see that smack dab in the middle of the 50% retracement area that goes all the way down to the pandemic lows. So that is another layer of support that's sitting right there, right around $500 a share. So if Tesla happens to fall down to $500 a share, I will most likely be loading the boat, not only in my M1 finance account, but also in my IRA as well. The next biggest loser that I had on the account was Apple, surprisingly. And if we look at Apple, Apple's fall really hasn't been that big, but it did end up being number 3 on the list, and Apple as well is coming up on a very nice looking support area. I'm probably not going to be super aggressive in buying Apple stock. I kind of like Tesla a little bit better. But if Apple comes down to this area, this is another fantastic area of support. I might buy this strictly for a bounce play. But if it gets down to right around the $112, $113 range, I think that should offer some pretty good bounce support for Apple if you're looking for a short-term trade, or if you're looking to hold this company long-term and you want a good area to add stock. I think that's a fantastic area to be adding stock. The next one was Alibaba. Alibaba and the 40 Thieves. Now, Alibaba had this huge gap down when China was putting those, I don't know if they put sanctions on them or if they were just warning them. I can't remember, but that's when they were talking about Alibaba basically being a monopoly. They're just going at it with Jack Ma. But anyway, after that gap down, it had a nice move back up, and now it is starting to roll back over. And I don't know how familiar you are with Alibaba, but they have been growing super fast, and they are projected to continue to grow super fast. So if Alibaba drops below $200 a share, I'm probably going to be very aggressively buying Alibaba. I'm not super into Chinese stocks, but Alibaba and Baidu are two that I do have faith in. So if Alibaba drops under $200 a share, I am going to be all over it. The next one, which was performing poorly, was the ARK KK fund, and that one has a lot of Tesla in it. So obviously the move down in Tesla's drive is pulling ARK KK down. So I'm not too worried about this fund at all. And there's been a lot of outflows in the ARK funds, so that is kind of surprising. I kind of figured people would be sticking with ARK a little bit longer than they are, but people are looking for the exits. But I'm not too worried about it. You know, this is a fund that you want to be holding for at least 5 to 10 years. So if this thing does pull back, I will continue to buy it. I'm not going to sell any of it at all. Even if this thing crashes all the way down to 100 or below, I will still be buying this fund. All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.